Hello and welcome back. A little bit behind the ball here getting this done, but I noticed Friday when I uploaded the other video, it came back with the same error, so I uploaded it again, and then I noticed where we go to upload things that the one from the third actually uploaded three times. So I realized that the upload actually worked. It took place. It just aired out, so it didn't show me that it did. It didn't, usually it tells me that it's done, so I can see it right there immediately. But anyway, so you probably got a little duplication on Friday with some of that, so I apologize for that. Did not realize there was a technical error though, so. But it is what it is, right? And that takes me right to the quote that I'm going with today. Being happy doesn't mean that everything is perfect. It means that you've decided to look beyond the imperfections. Now, if we take out the word happy, or if you want to say being a happy trader, doesn't mean that you have to be perfect and everything has to be exactly the way you expect or want it to be. So um, the market rarely gives us what we want. It rarely does things the way we want it to. It almost always will do something different. And we want it to be quicker and faster and get to our target and go beyond the target. And we want more profit and we want it to be done quicker than before. And sometimes it's just a matter of accepting what is and the fact that things take longer than we'd like them to. And it's been hard for me, quite frankly, to accept that fact that things aren't perfect and they're rarely going to be. And a lot of it's just about enjoying the process and enjoying the journey and learning to be happy with that journey and that process. So that's really where this kind of struck a chord for me today. So with that being said, let's get to the charts. Whoops, there you go, my grabbing kids again. And not a whole lot this week. A little bit surprised, and a few of them are like this, which Alaska Group just blasted out to the upside. I'm not sure why. I believe this is an all-time high. Oh, shoot, I forgot that's not plugged in. It is. That's an all-time high on Alaska, but a breakout nonetheless, and not a little breakout, a big breakout. I mean, it blasted right through the resistance in a big way, almost double the average volume. The only tough part for us is that it already is beyond the entry point. The nice part is there's almost $7 of potential based on the target, based on the previous range. So if it has a pullback and we get that nice little roll reversal right there about 82, that's really why I left this on the list. I mean, this is one of those. I think there's another one on here too that was similar to this, where it's so far beyond the entry point that I almost just kicked it off the list. And that's typically what I will do. Probably 95% of the time, that's what happens. Is I go, okay, it's already beyond the entry point, and it's so far beyond, it's gone. So there's no sense in chasing it. But this one, I think, if it pulls back, and it might not be till next week, that's possible. But I mean, the week after this one coming up. But if it pulls back and it gets down 82, 83 area and starts to bounce and gives us signs that it's going to head back up, I'd be very interested in that. Anadarko, this is one, same thing on the downside though. Long-term picture, you can see that huge, we go to weekly, there's a huge head and shoulders. Not beautiful. I mean, it's a good-looking pattern. I just don't like the downslope of the neckline. Usually I like a fairly flat neckline, especially the downsloping ones are hard, but it's already so far beyond it. Taking the measurement gives us an idea of a long-term target, which is about 32. So it's broken that 58.50 level. It, again, just like the other one, is beyond the entry point already, but a nice little pullback to the upside and then a roll reversal there about 58.5. And between there and the target or the entry point could give us a good entry. Cardinal Health. This is one that I don't necessarily like. I mean, you know that I don't like trading off of resistance. I prefer breakouts. This is not a breakout candidate, but here's why. Because we've got not only this huge run to the upside, I mean, 78 to 88 in a matter of 2.5, 3 weeks. And it's been going sideways ever since. Pulled back, rally back up, pulled back, rallies back up, pulls back for 2 days, and Friday takes off and rallies in a big way, but with very light volume, very suspicious. You go look at the indicators, and we've not only got a pinch, but Stokes and MACD both are looking bearish. They're both pointed lower, so that right there tells me that we could have this resistance could hold, and if it rolls over and drops like it has the last 2 or 3 times it's hit here, then there may be a good opportunity here. Because there is still a gap here between 83 or so and what's that, 85? That little gap has yet to be filled. So we have those odds on our side as well. So even though I prefer breakouts, sometimes it makes sense to look at these where we're bouncing off support or breaking down off resistance. So CCI, double top. We've got basically kind of a head and shoulders there as well. We've got the head right here in the middle, left shoulder, right shoulder. There's basically two right shoulders and a drop to the downside. It's sitting right about the entry point, so we'll see what the action looks like on Monday. Deer built a nice little base over the last 2-3 months. And big move to the upside. I think that's earnings related. I recall that's about the time when earnings came out. So big gap to the upside. It's kind of pulled back a little bit after that, and now it's making a move. The volume's not very heavy, which is a little nerve-wracking, but Stokes is up here looking like he wants to run across the 80, so that might create a bullish move. We'll see what happens with Deere. Looking for the breakout there. Dr. Pepper Snapple broke out. This is a lot like Alaska. Big breakout to the upside, very solid. Not the kind of volume we had in Alaska, just hit the average, but everything else looks pretty bullish. The bands expanding. We're pushing the bands. Alaska looks better. These are both in two completely separate sectors. Alaska's a travel, right? A transport, and Dr. Pepper is food, basically soft drinks. So Alaska looks better technically, but who knows? So IACI, another one that's a little bit beyond the entry. You got a very good mix this week of bullish versus bearish, which is what we had. This is interesting. This is what we had back before the crash in September, October. We had a fairly solid mix almost every week. So interesting. I just thought of that. But what we've got here with Interactive is a breakdown, slight increase in volume on Thursday when it broke down, and a little up day yesterday, but with very light volume. So still fairly bearish. It is beyond the entry point by a decent amount, enough to not justify. If it goes down, if it takes off to the downside, basically just missed it, but it is what it is. Monster, kind of a rising 3 here. This is what popped it on the radar. I mean, I saw the pattern, even though it's not textbook, it's not perfect. I flagged it, come back and look at it, and looking at it, I mean, this is another soft drink, another beverage. It's interesting how them and Dr. Pepper have all broken out. They're breaking out to new highs. And so interesting to see that two companies in the same sector are doing the same thing. And it seems like Coke and Pepsi were on, no, well, not last week, but the week before. Coke and Pepsi were on the radars. I don't remember if they were bullish or bearish, though. But we have basically a rising 3, looking pretty solid. The bands are pinching, which makes me think this might go sideways. And then MACD and Stokes are, MACD is kind of flat, looking a little bit bearish. Stokes is looking bearish. But then again, not a whole lot of emphasis on those. But if it does make a move to the upside, it might be worth taking a shot at. Procter & Gamble, another one, just like Alaska and Dr. Pepper. This one is like Alaska. It broke way up. I mean, it's basically halfway to the target, which is not necessarily a good thing. We do have the potential of this being a minor support. We could adjust things a little bit. I think one of these had a 200-day moving average coming into play. There we go. That's what it was. Busted right through that 200-day moving average, pushing the bands big time that have been pinching, and solid volume on Friday. And Stokes and MACD all looking bullish. So this is one, it's debatable whether to try to, I hate adjusting plans, going, well, there's a little bit, this is kind of a minor support area. You could realistically, there's not a whole lot of support there, but we could look at this and put a stop just slightly below there. But your range is a lot smaller, and you're going to be, it's kind of tight. So I'm going to see what happens on Monday. If it takes off and runs and we missed it anyway, oh well. If it pulls back some, then I'll reevaluate and see what we have from there. T. Rowe Price, nice little symmetrical triangle forming. So looking for a break to the upside. And even though the symmetrical triangle's there, I didn't draw it because I'm using this horizontal, which is almost always what I use anyway for breakout points. So 76.50. So if it gets above there and hits the entry point, it's out of the triangle as well, and that's really kind of what we're looking for. So we had the inverted head and shoulders back here as well that you can see. It's created a big push to the upside. I'm assuming that's earnings. that big volume day with the big up. So either way, we have a good look here. So, and then last but not least, this is a lot shorter than normal, but that's a good thing, right? It's rare that I don't ramble on for 20 minutes, but XCC, oil and gas. Oil and gas sector's been mixed. There's some that have been getting tanked and some that are holding stable and others that have been excelling. Most of them have been getting beat up pretty bad. But looking for Cinemax to break to the downside. And this is the one, yeah. We broke below the 50-day. We're sitting right on the 200. Stokes and MACD both looking bearish. You've got some divergence on MACD. So, and it's just barely starting to push the band. So if this breaks to the downside on Monday, I'd be very comfortable in a bearish position. And the beautiful thing is we've got some pretty solid opening, about $9 there, so of potential. So that's pretty good. So with that being said, going to wrap it up and keep it short. And we will see you all in the next day or two with the little guys and an update on what's happened here and the rest of the market. All right, y'all take care. Bye-bye.